Hey guys, it's another market news update here again today. It is Sunday today while I'm recording this, and it was Saturday yesterday, and that's what we're going to be looking at. So the markets were closed, but we did still have a few things come up in the news about finance and economics and the world that we see it. So we're going to have a quick look at that, and starting off, we're going to look at the crypto correction that you've no doubt heard about. A couple potential developments with the Omicron variant and US growth forecast being cut. And then strangely enough, we're going to look a little bit at Louis Vuitton and Canada Goose and some troubles they're having over in the East. So to start us off, obviously crypto, the entire market had a correction yesterday, and quite a big one at that. Bitcoin dropped below $50,000, so about a 20% drop at its peak. It actually hit a low of $42,000 per Bitcoin, which was pretty low, before rebounding to about $49,000, which is where it's sitting at the time of me making this video. Now that is about 25% off its all-time high that we saw just a few weeks ago of $69,000, so that's actually a decent correction so far. And as you would expect with a drop like this with Bitcoin, the rest of the crypto market followed as well, as we usually see. Ethereum dropped about 17% before it rebounded a bit, leaving it at around -5% for the day. But of course, everything dropped. ADA dropped, XMR dropped, Sol dropped as well, as we'd expect. And I'm sure whatever coins you follow probably dropped as well. Obviously, there are thousands out there, but the markets tend to move in unison. And we saw that yesterday as well, with pretty much everything seeing 10 to 20% drops. Now, of course, with it being crypto, there's a lot of leverage and a lot of margin in the market. A lot of people trade with that risky stuff, and so there were liquidations which probably made the crash worse. If you're trading on margin, you take out debt to buy more Bitcoin and then Bitcoin crashes, well, your position gets liquidated. You're forced to sell your Bitcoin without you even making the decision, which drops the price further, which causes more people to get liquidated, and that's why we see really sharp crashes like we did yesterday. Now, despite that being pretty much the case, no one really knows what the exact trigger of this flash crash was. And anyone who claims they know for 100% is just lying to you. But this was probably just a bunch of investors getting spooked by things like the Omicron variant, the poor US economic outlook, and the poor economic outlook in the world as well, and then computers and leverage and margin exasperating the problem and making it a little bit worse. Obviously, Omicron fears are around and causing stocks to fall all around the world as well, and crypto markets are still very highly correlated to traditional finance markets, to many crypto fans' dismay. There is this idea that's pushed around quite a lot that suggests that Bitcoin and some other crypto assets as well are actually market non-correlated assets, or I should say non-market correlated assets, but the truth is that while that may be the case in the future, it isn't really the case now. Most people who are invested in crypto in some way are also invested in stocks and shares or ETFs and things like that, and there seems to be a much greater correlation than some people would have you believe. It's lovely to think that Bitcoin is an inflation hedge, but the truth is we haven't actually seen much evidence for it being as such at the moment. It could grow into that in the future, and I actually think it will, but I think it's going to take 10 years to get there, and I certainly don't think we're there today. Otherwise, the crypto market wouldn't have crashed on this bad news as the rest of the markets did as well. It's obviously possible that this could be the start of a bear market for the crypto sector. And if that is the case, then you would expect to see lots of bull traps along the way, 10% drops followed by 5% gains. But the truth is, no one, and I mean literally no one, knows what's going to happen next with crypto, as it's just so volatile. All those crypto mega bulls who go on TikTok and show you their technical analysis, well, not a single one of them predicted this flash crash. And the bears didn't predict this flash crash either. No one knows what's going to happen. Don't let anyone tell you they do know what's going to happen, because they're just lying to you. Now, while crypto markets were open, well, traditional finance markets weren't, because it's a Saturday, it's the weekend, although, to be honest, that's got to change within a few years, hasn't it? Nonetheless, Omicron fears continued, with some scientists coming out and claiming that Omicron may be resistant to vaccines, but again, this is just still too early to really know. It's also worth noting that a lot of vaccine companies are pushing the idea of new vaccines being needed, and there should be no surprise there at all, so we should really take that what they say with a grain of salt. Obviously, Pfizer, who makes profit on their vaccines, are going to want to see more vaccines needed, because it's going to mean more revenues for them, a higher share price, more profits, and everyone in the company does well. Personally though, again, to reiterate my position on Omicron, I don't think it's as huge deal as people are making it out to be, and I think institutions and governments especially are using it as a scapegoat for poor economic outlooks. Now, speaking of poor economic outlooks and Omicron being used as a scapegoat, Goldman Sachs and the International Monetary Fund have both come out and cut growth forecasts for the US economy because of the Omicron variant. Now again, they have no more information regarding the variant than we do. They don't know if the vaccines will actually work or not, or if we're going to need new ones, and if we're going to need booster shots. They don't know if this variant really is more contagious or is more or less dangerous either, so they have no basis to claim that Omicron is going to cause growth to be poor in the future, but they're doing that anyway. Yep, they've both come out and said that they've cut their growth forecast for the US, and the IMF have actually done it for the entire world, and they're blaming specifically the Omicron variant, claiming that it's going to harm consumer confidence and make it more difficult for industries to reopen and supply side shocks to be fixed and things. But again, they said the exact same thing about Delta, and it had no real problem in the end. There are far bigger problems in the economies around the world, like interest rate rises being pretty much imminent at this point, huge levels of private debt and household debt and mortgage debt, and huge levels of government debt as well. And as interest rates rise, all of these are going to become really big problems. The prospect of tapering and less liquidity in the markets and basically no more Fed purchases is also scaring a lot of markets, but it's not just the Fed that's tapering or planning on tapering. There are a bunch of other central banks doing the exact same thing as well, and so markets are going to have a little taper tantrum. Of course, Omicron and COVID in general is a really easy excuse for policy makers to claim that it's the variant's fault and it has nothing to do with their actions. They did the exact same thing with Delta. Whenever there was a poor US jobs report, they would blame it on the Delta variant, harming consumer sentiment and stopping people going to work, despite the fact they didn't have any evidence to back that up. It was just a hunch they had. In the end, Delta had very little impact on earnings and GDP growth and the like, and I expect the exact same with Omicron, but that doesn't mean that GDP growth is going to be super high or consumer sentiment's going to come back up to sky high levels. It just means that it's going to be low for other more fundamental reasons like really high inflation. Now for the maybe a little bit odd news, we have Louis Vuitton and Canada Goose as well, and in particular their little lovers spat with China. So basically, yesterday Louis Vuitton has been accused of being biased against the Chinese people and Chinese shoppers, with a return policy being different in China to the US and Canada. Now, forgive me if I can't remember the exact details, because to be perfectly honest, I don't care what the actual return policy is, but it's something along the lines of free returns in the US and Canada up to 30 days, but the same isn't true for China, and the Chinese Communist Party is not happy about this at all. The same sort of thing seems to be the case with Canada Goose, having different returns policies for Chinese shops as opposed to Western shops. And both of these companies have been called out by Chinese state-run media over the last few days. The group that actually owns Louis Vuitton, I hate to say it, but they have one of the stupidest and most difficult names ever. I think it's Louis Vuitton Moet Hennessy. Just call it Louis Vuitton. But here we are. LVMH dropped 3% in share price on this news, while Canada Goose dropped 20% from fears that they will be fined or penalised or targeted by the CCP in some way. Really, this is a bit of a witch hunt from the CCP, and it's coming out of Chinese state-run media, so it's pretty clear where it emanates from. In my mind, this is about creating a common enemy for the Chinese people, about convincing the Chinese people that Western companies are biased against them, that they're racist, that they don't like them, and that they shouldn't shop in those companies that are biased against them. Now, this is actually very similar to what we saw happen earlier in the year in regards to Tesla. Basically, Tesla was unjustly targeted by the CCP, where they gave loads of news coverage to anti-Tesla protests, and they pointed out loads of things that the company did wrong, and it was basically just an attempt to reduce the sales of Teslas in the country and promote domestic alternatives. Really, this isn't any surprise from the CCP. They are very nationalistic, they love their own companies, and they don't like foreign companies having strong footholds in the country. Obviously, Louis Vuitton and Canada Goose are both luxury products and luxury cars, luxury products. They sell loads of products and generate loads of revenues in countries like China, and China doesn't like that. They want their own domestic companies to be these high-margin luxury goods producers because that's where a lot of money comes from. We can probably expect more things like this in the future. I wouldn't be surprised if we saw more companies getting targeted, car companies, luxury goods companies, and sales for these luxury good manufacturers to decline in China, which is bad news for a lot of these companies. An example is Aston Martin. They've built an entire strategy around the Chinese market, but because they're a Western company, they're based in the UK, the CCP is going to take a disliking to them. And if they get to a point where they're actually doing well in China and they're selling lots of cars, well, then there'd be a strong chance that the CCP would just turn around and penalise them or stop them from being able to run effectively. That's pretty much it for today. I hope you guys enjoyed this. I should put one out tomorrow as well on Monday, as long as there's enough news today on Sunday. I hope you guys are enjoying watching these daily videos. I'm having loads of fun making them, so I'm going to keep doing them for the foreseeable future. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon, where you can join our community of investors. You get access to our Discord, loads of exclusive content like private live streams, extra videos, and buy and sell alerts for my own personal portfolio. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with real non-market correlated assets. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.